Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, August 17th here. We got a few economic news to go over today, so we'll start off with our weekly jobless claims that we get every Thursday. So last week we had 244,000 people apply for unemployment. The forecast for this week was to be 241,000, and it dropped down to 232,000. So obviously good news. We see fewer people applying for unemployment. We've been within this kind of range for quite some time, which is obviously very good news. These are actually the lowest numbers we've been seeing. We haven't really had these type of numbers since the 1970s, so this kind of shows you how strong the labor market is getting here. Now we also got the Philly Fed. This is the manufacturing numbers that come out of the Philadelphia area. So we had numbers that came out the other day from New York, which jumped up quite a bit. As you can see here, it kind of stayed in the same range here. So previously, back in July, we had 19.5. And for August, it dipped down to 18.9. So it dropped, but not a significant amount. So it kind of stayed more or less within the same range here, whereas New York jumped up quite a bit. It was like 10 points or so. Industrial production for the month of July. So we had 0.4% increase in June. Forecast for July is 0.3%. It came in 0.2%. So a little bit of a drop there for industrial. So hopefully we can see that increase a little bit as we go forward. Then we got capacity utilization, which pretty much remained across the board, 76.7 across the board here. So forecast and the actual came in all at the same number here. Last but not least, we got the leading economic indicators. This kind of gives us a little foresight as to what they are expecting going forward in the economy, kind of like 3 to 6 months down the line here. So June we had a 0.6% increase, so obviously that's a great number there. But in July it dipped down to 0.3%, so it looks like they think things will slow down a little bit more unclear as to where the economy is going to be going, because there's still a lot of uncertainty, as we'll kind of touch here with the Fed. So currently the stock market's down. The Dow actually dropped at one point at 100. I think it's still down just over 100 right now. Part of it is, some other businesses like Walmart, bringing things down, as well as Cisco, big stock behemoths like them are kind of, because they represent so much of that index, it kind of brings the rest of the index down. So that's why you're seeing those down more. But also because we're seeing a lot, of course, more drama out of D.C. from President Trump dismissing his business advisory. So there's creating board, which is creating uncertainty about his Wall Street agenda, helping out getting businesses up to score, trying to create, your taxes and trying to help be more business friendly. And of course, comments about the Charlottesville clash over in Charlottesville, and just all the different things here, and is just creating more and more drama in DC, and that's not really sitting well with the investors as well. And then we got the spillover a little bit from FOMC minutes yesterday, that released yesterday. We had, after that was announced, the stock market liked it some, but of course it got capped based on the DC's drama. But the bond market did take off, which we'll show in a bit. Now, basically, the minutes from the FOMC, what we learned is that there'll probably be some type of announcement in September. Most likely that announcement will be talking about any balance sheet reduction. They have about $4.5 trillion of mortgage-backed securities treasuries that they're going to start trying to unload here after quantitative easing. They've been buying up these things to try to help out inflate or help out interest rates, and now it's time to kind of start unloading those. They've been kind of sitting on those for a while. We also got possibility of interest rates. They want to see if there might be any, but we're seeing also not really a consensus among the Fed members that not everybody necessarily agrees. There's been concerns by a lot of Fed members about the very low inflation that can't seem to hit that 2% mark, and it's been persistently low. So that's been a bit of concern for Fed members as well. And of course, with the low inflation, that helped out the mortgage-backed securities, because the biggest enemy to any mortgage-backed securities and interest rates is inflation. As when inflation goes up, it erodes or takes away the value of those mortgage-backed securities over time, because they're like over 30 years. So let's go ahead and take a look here at the bond market, as you can see, we had a nice increase here. We jumped up about 19 basis points from where we left off yesterday, or the previous day. Right now we're up about 2 basis points. We didn't really get a price improvement yesterday, so we'll probably see that most likely today. So you should see an improvement in pricing today, in mortgage-backed securities or interest rates here. Again, we're seeing this above the 25-day moving average. We're seeing this above the 50-day moving average here. So they kind of met yesterday, the 25 and 50-day moving average. Right now we're still seeing above the first level of resistance, which is our ceiling. So we might get hopefully within this range here shortly as well. But again, these have been pretty much the highs, so just be, again, cautious once we reach this approach. These have been kind of the highs of 2017. So once we get up to this level, if you're going to be closing anytime soon, you might want to kind of start locking in, as these have been the best levels we've been kind of seeing so far in 2017. All right, folks, so that pretty much concludes it. But if you guys want to get more updates, just come over to Twitter. You can find me underneath Mike Bjork, and I do post out there so that way you can get more updates after I create these videos in the morning here. Hope you guys have a wonderful day. Thanks so much for watching. I'll look forward to seeing you guys tomorrow. Bye-bye.